Hello, everyone. In this lecture, we discuss about the mutual funds and their benefits and their types and the different structures of the mutual funds in Pakistan. First of all, I define the mutual funds. Actually, the function of the mutual funds is to collect money from investors and then invest this money in securities like stocks, bond, money market instruments, and many other type of assets. So basically, mutual fund collect the money from investors and then make a pool and then invest this money in a different securities and different assets. So, what are the different benefits of the investment in mutual funds? So, why investors should invest in a mutual fund? This is a key question. Now, now we will answer this question by the benefits of the mutual funds. First of all, accessibility. Mutual fund units are easy to buy. There are more than 150 mutual funds in Pakistan. You can easily buy the mutual fund. You can easily invest in a mutual fund or purchase units of the mutual fund uh, because there are lots of mutual funds in Pakistan. Almost all of the banks have also introduced the mutual funds as a separate companies. So it is easily accessible in Pakistan. And second is the liquidity. If any of the second feature of the mutual fund is the liquidity. If any of the investor want to convert their mutual fund units into cash, they can easily convert these units into cash within a working day. And third benefit is the diversification. As mutual fund collect money from investors, like if one mutual fund collect the money from 10,000 investors and make a pool, then invest this money into different securities or assets, it means that they are diversifying their investments. So diversification, the main benefit of the diversification is the reduction in the risk. So mutual fund diversify the risk of the uh, mutual fund unit holders. So unit holders investments. And last is the professional management. Why anyone should invest in a mutual fund? Normally, all of the investors are not uh, not very much familiar with the markets. Like if any of the investor want to invest in a stock market, maybe he is not familiar with the whole markets, the dynamics of the markets, the companies, the opportunities. But if you invest in a mutual fund, then mutual fund company has experts, the managers who continuously watch the market and then get a maximum benefit of the different opportunities in the market. But on the other hand, if you as an individual invest in the stock market, it is a too much risky. And if you invest in a mutual fund, then mutual fund managers then invest in a market, then there will be a less probability of more losses. So that's why if you invest in a mutual funds, your amount will be managed by a professional management. So now we discuss about the types of the mutual funds. There are two types of the mutual fund. First is the open-ended mutual fund, and second is the closed-ended mutual funds. In open-ended mutual funds, these are the funds, and open-ended mutual funds. These are the funds that continuously create a new units, that continuously issue a new units. But closed-ended mutual funds, the number of shares or number of units of the closed-ended mutual funds are fixed. Once they issue their all shares or units, then after that they cannot issue a new units. But in open-ended mutual funds, they can issue a new units as well. So this is the basic difference between open-ended and closed-ended mutual funds on the basis of their issuance. Uh, and after that, in Pakistan, there are different types of mutual funds, different structures of mutual funds. First of all, this first structure is the equity scheme. In equity scheme, the, sorry, the equity fund is a fund that invests in equities, more commonly known as stocks. The equity schemes based funds normally invest in stocks, shares of different companies, and then get profit and then distribute this profit to the mutual fund unit holders. And second structure is the balance scheme. In balance scheme, the fund provide investor with a single mutual fund that invest in both stock and debt instruments. So balance scheme mutual funds in structure, These type of mutual funds invest in stocks as well as in debt instruments, not only in stock instruments, but they also invest in debt-based instruments. And third type is asset allocation mutual funds. These mutual fund can invest in any type of securities, in any type of securities across multiple type of securities and investment styles available in the market. And the fourth type is the fund of fund. These type of mutual funds are those funds which invest in other mutual funds, like one a, let's say a mutual fund invest in a b mutual fund. So these type of mutual fund normally invest in a other, just other mutual funds, just in other mutual funds. And the next category is sharia compliant schemes. In sharia compliant schemes, normally these type of funds invest in a Sharia compliant based instruments like sukuk, ijara, uh, and shares. So these type of companies invest in a Sharia compliant based instruments. And next is the index tracker scheme. uh, these type of mutual funds only invest in a market indexes like KSE 100 index, Standard Pool 500 index. So they get profit on the basis of market indices and then distribute to the uh, fund fund unit holder. Money market funds are those mutual funds who invest in a money market, like money market refers to the short-term debt instruments, just like um, these type of mutual funds normally invest in a treasury bills and the bank deposits. And last structure, uh, which is normally observed in Pakistan, is income scheme, and these type of funds normally invest in a fixed income streams like T-bills, government securities, and PIBs. Uh, these type of mutual funds invest in a fixed income based securities like preferred shares. In preferred share, the income is fixed. In T-bills, income is fixed. In PIBs, income is fixed. So that's why these type of mutual funds invest in those securities where income is fixed. So this is just about the info of the mutual funds. In next lecture, we will actually analyze the mutual funds. We will do analysis of the mutual funds. And thank you so much.